Hello everyone, welcome to another session. So in this video, I'll be talking about the importance of context in trading. This is something which many traders ignore also because you see a perfect setup. We know a setup, right? And we look at that setup and we look at the textbook definition or the pattern, and then you enter into a trade and it miserably fail. So why is it happening is because you're ignoring something which is very important beyond the setup, that is context. And that's what I'll be discussing in this session. And if you want, I can demonstrate these in the live session also. We have the live market mentoring program. Longer program is there, but we have a shorter 1 week live market mentorship and analysis program. You can check the details in the description and you can get in touch with us with the contact number which is given, and you can join for that 1 week whenever you're free. Even if you're a working professional, whenever you're free for 4 days, you can attend those sessions. Okay. Now, let me ask you something honestly. How many times you have seen this? Like, even if you're following my setup, right, you are getting a perfect level, you are getting a perfect setup, and you are getting it at the perfect support resistance level which you already marked because you already planned this is where I'm going to take a trade. And at that level, for example, at the support level, you are getting a perfect candle also, right? That is giving a confirmation. That means everything is looking very clean, and then with utmost confidence you are entering in that trade, and suddenly market goes completely against you. You might be taking the stop loss. That is the only thing that will ultimately support you. But still, everything looks very clean, but still it is going against you, right? Market is completely going against you. You have taken the stop loss and you saved your capital. You cut the losses, but ultimately you had to cut the loss, right? Now, how is this even possible? This is what you think, right? Because I was perfect. My entry is perfect. I got the confirmation. How is this even possible? This was a perfect scenario that I can ever get. But let me tell you something very clearly. This is what you need to understand. Market does not care about your idea of perfection. There is nothing called as this is a perfect trade, this is the best entry. Market is not going to reward your confidence about a setup. It is not going to reward your expectations or your belief. It rewards only one thing. And once you understand this, you completely change your mindset and your outlook towards trading also. Market respect only the truth. What I mean by that, the truth of price, how the price moves, the truth of demand supply, and the truth of volume, and the truth of market behavior. That is ultimately depending upon individual psychology, who's driving the market, and the truth of your discipline. Right. But the biggest illusion when it comes to trading or the traders have is the perfect setup. Right. This is what most traders think, and this is where most traders go wrong also. I've seen they think that even my mentees also, I teach a setup, right? If it is a CPR and Camarilla pivot, this is one of the perfect setup. They think that blindly this setup is perfect and this will 100% work. And trading here will definitely work 100%. That 100% mindset is what the problem. But you need to understand, a setup, when we talk about, it's not a guarantee. No one can give you a guaranteed setup. No one in the world know the outcome of what is actually going to happen in the next candle. So there is nothing called as a perfect 100% guaranteed setup. It is only a probability. Even when I discuss my best of the setup and where we make maximum money, it is only a probability, but we manage the probability. When you have the good probability, you have the edge, and we give a time to work the edge in our favor, and that's how we become profitable. Even on a daily basis, also, if you see if I'm closing in green, that doesn't mean one or two trades I've taken, I'm closing in green. I've taken many trades also, might have taken 4, 5, 6 stop losses also, but I might have taken sometimes 20 trades or like that. So that means I'm giving a sample size. So when I talk about a setup, I might have different setups and multiple setups coming a day, and you manage the stop losses. And when I say setup, it is ultimately just a signal. It is just a chance. I have a chance here, and this is a signal that I can try here, but I have to manage it. And it's not a certainty, it's just a probability. So this mindset, if you have, then you're welcome. You can attend our sessions and you can see how probability is going to work in your favor, how the so-called edge is going to reward you over a period of time, over a sample size. If you take for maybe a 1 month or a 6 month, that is when you become an expert. And that's how you have to learn trading. It's not that someone tell that I'm lucky, I got this win, I'm unlucky, it took my stop loss. There is nothing called as luck or unluck. That's the mistake. Even traders look at a textbook pattern, right? This double top, a double bottom, or a cup and handle. right, or a clean structure, and they just assume that now market owes me a win. Market is supposed to give me a win. It is a responsibility of the market to give me a win, because this is what I have learned in textbooks, and this is what the typical pattern that have to be there, and I got it. I'm entering upon that only. I'm not doing any mistake. If it goes against me, it is a market doing a mistake. But what is the reality? Reality is market owes you nothing. In fact, no one owes you anything. No one is going to give you anything, right? The real problem is, you know, once you believe a setup, right, then even the one that I talk about, you blindly take a trade based on that without even understanding the context. You stop observing the other things. You stop observing the reality. You stop understanding the context. For example, this war scenario is there, a big gap down and a bigger fall is coming, and still you look at a support resistance level which is otherwise may not work on that context, right? So you ignore the high volume or the weak volume which is coming at a level. You ignore the hesitation of price which you can see at certain levels, and you ignore the loss of momentum or the momentum that you are getting at that level. Because what is happening when you see a setup, because something which you have already learned, this is happening with even the experienced traders also, because your mind is already decided this trade has to work for me. And that's the biggest mistake, right? So here the desire actually replaces those kinds of observation, and that's when, your failure actually begins. Observation and expectation, there's a bigger difference. See, when we talk about a beginner or an amateur, he or she trade based on expectation, right? This is the level I should be taking here. This is what my mentor have taught me. But experience will teach you something different. And that's why I tell you, you have to stay in the market minimum for 6 months, even before we quit at least, right? So they basically trade based on expectation. But what professionals we do, we normally do based on observation. Yes, we have the setup. You also have the setup. Everyone have the same setup. But why then certain people win? Because there is something beyond the setup that you need to watch. That's what I mean by observation. That is a context. You may be missing that, right? So that's what, again, that's why we conduct the live market mentoring session. Yes, the setup I can teach post market also, but how it is implemented and executed during the session, that's very important. And that's why you need the help of a mentor who can teach in the live market. So markets speak to you. In fact, markets speak to you in terms of, small pauses or a tiny rejection, or you'll see a clean subtle shift. But in fact, you only look at that setup, and most traders ignore those signals. You are not able to understand the small pauses which is given by the market. You simply ignore those tiny rejections which is given by the market as indications, right? Market is actually talking to you, and there will be some subtle shift, something market want to tell you, but you ignore that, and that's where the real problem comes in. So it's not just about perfect setup. You also have to see the context. And these people, what I've seen is they only see a big pattern and jump into a trade and enter a trade. Even I also teach the same setup, but I may not enter the same setup every time, because I observe other things also. I observe the volume, I observe the context, I observe the rejections, I observe the confirmations. But if you ignore that, you simply mark those lines just because I've told this or someone else have told this. Even I'm not talking about any others. I'm even talking about my mentees also, the same people who are attending the live session also. Because in a class, out of 100 people, 10 will be successful. That's a big ratio. Even not in this, I'm a UPSC mentor also. I see, I can, out of 1,000 students, we got almost 80 results, out of which there are 15 in top 100 in the last UPSC exam. You can look at my Instagram page and you can see even rank 27 is there. All India rank 27 in UPSC, IAS exam. All India rank 39 is there. All India rank 53 is there. All India rank 89 is there. All India rank 10, 13 is there. 35 is there. These are our students. We made them to crack UPSC, one of the most toughest exam. But that kind of success ratio we may not be able to get in trading, because money is involved, psychology is involved. You decided something, you will do that only, even after continuously telling this, even after showing this also. So you see a big pattern, a best pattern, you enter the trade. But what is the truth? Truth is that market is whispering to you. Market is giving you signs. Market is talking to you, but it won't shout at you. No, don't take this. Market will whisper. Market will tell you in, small, tiny rejections, or, small pauses. That is the way market is communicating to you. That's what I told you. Market whispers. It won't shout. If market shout at you and tell you that here you need to take a trade, here you should not take a trade, then everyone will make money. So what is important is the context. It is a timing of entry is more important than the setup. Even the setup is perfect, but the timing is very important. And this is one of the most powerful concept. It's not just about setup. It's not just about a breakout. When you enter after the breakout, even if your setup is perfect, if you're not right on your time of entry, it can fail because you are going wrong on timing. It can lead to unnecessary drawdown. It can make you taking unnecessary stop loss. Then it give a pullback and it can give you profit and a big trade in your favor. The problem is timing. The problem is the context. The problem is you're not waiting for the confirmation. And then you only understand this. Market moves in phases. Now, once you understand this, then you understand the importance of context. You understand the importance of entry timing also. Because market move in phases, there will be accumulation, there will be expansion, and there will be distribution, and there will be contraction. These are the four phases in which market move. Now, if you even here also, if you enter at the wrong phase, imagine even you forget about scalping, forget about momentum trading. Think about you as a swing trader also. That is where the bigger possibility is there to win, right? Because you need to look at a larger context. So many people can win there. So these are the four phases in the market. Even if the best setup is there, but if you enter in this wrong phase, you'll fail. And a shorter version of these phases, what you see in intraday trading, even shorter is what you need to use when it comes to scalping. You need that kind of perfection, and that kind of entry timing is required in scalping. You cannot take trade on every candle. You need to be like an eagle waiting for that prey, and the moment you get that opportunity, scalp it and immediately come out of it. So the point is the setup, the pattern, your understanding alone is not enough. It may work sometime, but most importantly, the context in which you trade, the timing of your entry, that matters. Now, when trade goes wrong, then what the traders do? Normally, what you see is even you might be doing the same thing. You fight the market. When you get that maturity, yes, it have gone wrong. Let's wait for the next setup or next entry. That is where you will show that maturity. But you start fighting the market. You think that the market is wrong. Even if it has taken the stop loss, you re-enter, or you may extend or stretch your stop loss a little bit more. You think that it will come back. You always think that I'm right, market is wrong. I owe a win here. Market owes me a win, but market owes you nothing. It can wipe you out. Market is never wrong, right? Only your interpretation is wrong. Only the understanding that you have about the context is wrong, or your timing of entry is wrong. And here is where the role of psychology is very important. In fact, this is where the real damage happens. When you see a trade starts moving against you, because you have entered a so-called very textbook pattern, you entered a perfect trade. But when the trades start going against you, you're dealing with money, right? It's human being, human psychology, fear increases. More than that, your ego get activated. And your mind will start justifying your entry because on one side fear is there, second side ego is there. You don't want to lose, so your ego is there and your mind naturally start justifying what you have done. Then what you will do, when you start justifying that you are right and market is wrong, you think that it will come back. Market owes you something, right? And you hold that losing trade for long. You ignore that whispers, those signals that the market is giving, not cutting the loss immediately, not following the rules. If you're following the rules, even if that's what I discussed in the beginning, even if the trade goes against you, you will cut that immediately and you start hoping for the reversal. What is the result? That small loss become a big loss. Now, remember in trading, you cannot have one outcome. There are four outcomes: small loss, small profit, big profit. And the fourth outcome is big loss. This should never be there if you want to be profitable. You need to have small losses. It is inevitable in trading. Losses are inevitable, but losses need to be small. Profit can be small or big. Never have a big loss. Why big loss is coming? Because that's where you went wrong against your system, your setup, your discipline. Once you go wrong with that, then you're finished. Just your control in market is just to cut the losses faster, right? Now, how can I control this? Journaling can be really good. This is, in fact, one of the real game changer. Even to our live market sessions, our mentees, there are people who are attending for last 4, 5, even 6 years also. still they do journaling, and still they'll send me the trades that they have taken towards the end for evaluation. If I'm not getting time, my team will do that also. Still they do that even after trading with crores of capital, lakhs of capital, making that profits. Still this is, the the part of their life, in fact, and that's why they become successful also. I've seen most of them who are giving the journaling are successful. And it's not that they stop doing this after 1 year, or once they start getting profit, they stop. They're continuously doing it, even with a bigger capital, even with bigger profits than what I make also. This is what most traders skip. Because see, it may look slightly difficult to do the journaling, to do the analysis. Sometimes it will be painful also, right? Looking at the losing trades, and then when you start doing the journaling, you start regretting also, maybe because of that. But journaling will actually reveal what happened, your impatience in that trade. Then you can improve upon that. Your emotional triggers, if you look at it, then you can improve upon that, and your execution mistake. So if you can correct these three, your impatience, I would have waited patiently, or your emotional trigger, fear or greed, or your execution mistake, I got a better trade, not at a better level I've executed, right? So if you can correct these three, naturally you become a good trader. How can you correct this? You do 10 days of journaling or 1 month of journaling. It's done. It's done for you. That's for sure. That I can tell you. I've seen people doing it, and I've seen people improving upon this. That my mentees, that's why I'm talking about this. And over a period of time, you will see good patterns in your mistakes, and then you can correct it. So you understand the pattern in your journaling, not in charts. The problem is in your behavior, right? So guys, again, it's not about the market analysis. Market analysis, I'll do it for you, right? It's about the self analysis that I cannot do for you. Even if you're my mentee, even if you're attending the live sessions every day, market analysis, I'm doing it morning and I'm sending it to you in the group just before the live market session. And I'm also analyzing the market during live market, right? So market analysis part, you leave it to me, or you are doing it means you do it. It is easy also, but the self analysis is what more important. So that is why I told you it's about journaling. That will help you to analyze yourself, because I've always told this, right? Market expose your weakness, market expose your fear, market expose your greed, market expose your impatience, market, in fact, expose your irresponsibility, market expose your lack of discipline. So what we need is patience. That is the most underrated edge. We talk about edge, we talk about edge in the setup, we talk about the probability of the setup. But what I have seen, what I have realized over a period of time, you see, as a beginner, you won't understand the importance of this discussion, what I'm doing. Because you think that I get a perfect setup. This guy is not discussing anything in YouTube. He is only talking about things in the mentoring session. That's what some of you who's watching this video think. But even let me tell you, if you have patience, that also have the edge. That is the most underrated edge. In fact, most traders think that early entry is a smart entry. I am going to get it fast. I am going to get it at a better price. But what is the reality? Early entry is simply impatient entry. Sometimes, if you're lucky, that's what I would say, you get it at a better price and that moves in your favor. But what professionals will do, what we do is we wait for a confirmation, we wait for alignment, we wait for clarity. Even if you miss the, I'll show you one simple example if you want. Just give me 1 minute. Even if you miss the first move, you still can do very good. Look at this. I hope you can see this, right? So here I got, this is my Virgin CPR. Okay. So I got this beautiful entry if you are entering early. But even if you miss this move, when you're getting the second rejection, so already you know this is an important level. Already you know it gave a rejection. Now again you are start getting a rejection here. So the second move is even giving you a better opportunity, even if you miss the first move. So just have this in mind. You don't want to have that FOMO. Okay, if you missed it, missed it. If you can capture this after breaking this low, this red, this green candle low, you can capture that even in this also. That is the power of waiting for the confirmation, because now you see that selling pressure is coming. Or even if you miss this entire move, why can't you capture this bigger move till this 20 EMA? Even upon the bounce also, you started getting a move here, right? From this, you are getting the bounce from 20 and 200 EMA. Again, if you miss this, You realize that you're getting a support here. Second time when you see a bounce, can you enter and can you capture a bigger move? Yes or no? So that is what I mean by if you wait, you get the best move. So many people think that early entry is the perfect entry or the smart entry, but that is the impatient entry, waiting for the confirmation, waiting for the alignment of structure, waiting for that clarity. That is what you should be doing, right? So even if it means you are missing the first move, you always have the second chance, and second moves give you the best outcome also. So market rewards that alignment, market rewards that, patience, and it's not the impatience or it's not the speed. Yes, of course, sometimes scalping you need speed. That is when you are chasing them, not when you're taking that kind of rejections or support rates, right? Another silent killer is this FOMO. FOMO is dangerous because that distorts your perception, right? You start thinking this is the opportunity when you have this fear of missing out. If someone who's not knowing that term FOMO, so you think that this is the opportunity. If I miss, I'll regret, and you enter without confirmation. So that is one of the biggest danger. And then you start quitting the stop losses also, and you start getting frustrated. Then your ego will get activated. Then you hold the trade, and then market goes against you. Why this is all happening? Because of FOMO, right? So the urgency is basically here created by your mind. It is not the market. Market is equal for everyone. Market moves are equal and same for everyone. Who's creating this FOMO? Who's creating this urgency? It is created by your own mind. Why? Because you don't have a system, you don't understand the context, you don't have the discipline, right? So if you are facing these problems, you are welcome. Just attend 4 day session, then you can see definitely there will be improvement in your mindset change. That's why even for working professionals, if you have only 4 days, you can attend our sessions Monday to Thursday. So, guys, again, execution is more important than the setup. So, people always talk about setup. I've told you, context and timing is more important than setup. Execution is even more important than setup. Even with a good setup, if your execution is poor, if your execution is wrong, then you lose, right? What I mean by execution, it is ultimately entry timing. It is again position sizing. It is about stop loss placement. So, and timing need to be perfect, that I already discussed. Position sizing. First, you look at the stop loss for this trade. So based on that, I have to, if it is a 20-point stop loss and my maximum risk is something like 2000, then I can go with 100 quantity. If it is a 10-point stop loss and maximum risk that I'm going to take is 2000, then I can go for 200 quantity. So depending upon your stop loss points, you will adjust this position. That's what I mean by position sizing, and immediately you place the. Now, why the stop loss is different 10 and 20 points, depending upon the context, depending upon the setup, depending upon your system, depending upon the trigger candle that you're getting. The mistake is basically traders, what they do is, in fact, amateurs, they increase size on perfect setup. But remember, this is also a probability. Bigger size equal to, yes, bigger outcome if it is in your favor, but bigger damage when things go wrong. See, I never look at the reward. I always look at the risk. Am I taking a bigger risk? Then I avoid that. Rest of the things are fine for me. With small risk, I'm okay with small profit. Or if I'm good, I may get if market is giving me, I may get bigger profit also. But in no case, I take a bigger risk. Just avoid that. I have to define my risk, right? Alignment is always the real edge. Understand very clearly this perfect setup that you see, a double top or double bottom or a cup and handle or whatever, Camarilla pivots or Virgin CPR, or whatever we discuss or whatever you read in textbooks or whatever your mentors taught you, that doesn't matter. Why you are not becoming successful and you watch this video till now? Because you have some issues, right? It is ultimately that alignment matters. What does that alignment means? It should align with the price, your entry. It should align with volume. It should align with market behavior. It should align with your timing. All together. That is why we are doing it very good. That is why, that's why trading cannot be taught post market. How can driving taught in a, you know, a different scenario in a room? How can someone learn driving, swimming? That's the way trading also. That's why we have the live market session where we can discuss these, we can teach these, we can demonstrate these, how I take the trade, how I take any number of stop losses, even in live trading with even thousands of mentees also. I'm shameless, I'm brutal with the stop loss, I'm ruthless with the stop loss, and shameless also by taking. In fact, that is pride for me, because that is self-respect. If you take stop losses, you're protecting yourself and you're teaching others this is how it is and this is how you should protect yourself. This is the only thing that protect you in this market is brutal. Market owes you nothing. Even if you believe market owes you some profit, it owes you nothing. So if you are not aligning, your setup is meaningless. Perfect. You need to align with your price, the volume, the behavior, that timing. This is what I call as the Fab Four. It's not Kohli, Williamson, Joe Root, Babar. No, this is my Fab Four: price, volume, behavior, and timing in the market. That's my Fab Four, right? So now the question is, why repeated failure is happening? If your setup keep failing, the problem is it is not the market. It is not the setup also. It is your impatience. It is a poor timing. It is an emotional decision, because the same setup is giving me profit. The same setup is giving, 1 out of 5 mentees the profit, or 2 out of 10 mentees the profit. Rest of them, that is how the anything, if you take, it is how it is, right? Especially when it comes to trading, the probability will come down because emotional decision, because psychology, because fear, because greed. These things are not there if I teach you for UPSC, if I teach you for CAT. It's very objective. I am a CAT trainer, I'm a UPSC trainer. Those are objective. I teach you this, you write this, you get the mark. You mark this, you get the mark. There is no question about that. But I teach you here, you do exactly the same thing. But if you miss any of the price understanding or the context understanding or the timing understanding, or if psychological trigger comes, if emotion comes, if greed comes, if fear comes, all these factors are also connected, right? So the truth is, you are not ready. You are impatient, right? You are not following the discipline, emotional decision. It's not the setup what the problem. Setup works, but you were not ready. You were not aligning with what actually should have been done, right? So the 4 pillars of trading, what is that? First, execution. That's ultimately more important. Patience. I've done a previous video also. I've shown example also how I patiently wait even after a bigger breakout that you got, and how early entry trap me and next entry give me good reward. So execution, patience, alignment, and self-control. If one of those is missing, even the perfect so-called setup will also fail. So once you understand all these, what I've told you, that's why I told you this 15 minutes, 20 minutes. I don't know how much I've taken time, but this definitely, if you followed this, if you understood this, and if you can resonate it, and if you can connect it with your trading setup and style, whether you are taking our mentorship program or anyone else mentorship program, or if it's a self-learning, it will change everything. You'll you will stop chasing the trades or the setups. You'll, stop forcing the trades, and you'll stop over analyzing. Over analysis is paralysis. And you will start waiting for the trade. That patience will come. You'll start observing things. It's not just about blindly believing a setup which you marked yesterday. You marked a setup and level yesterday for today, but the context have changed overnight or during the market. The context have changed. Then how is it going to work? Think about it. You marked that level, you marked that context yesterday, right? And you trade today also for the same, without understanding scenarios, and the context have changed, the VIX have changed, this decisions have came. And you will start acting only when you are perfectly ready and everything is aligning with you. So what will be the result? Then even you will have losses even then, but that losses become a learning, and that wins becomes validation. And more wins you will have than losses. You will have small losses, bigger wins, and smaller wins also. Big losses you will never have. So next time when your setup fail, right, whether the setup that I taught you or someone else taught you or you have learned, do not blame the chart, do not blame the mentor, do not blame the indicator, do not blame the market, because setup is always going to work. Ask yourself, did I rush? Was there any impatience? Did I ignore the signals or the small pulses in which the market have given indications to me? Did I act emotionally? Because ultimately, let me tell you, the setup is going to work. It didn't fail. You are still learning how to execute it, right? So in trading, it's not about finding perfect setup. Any setup can be perfect if you can follow that forward I've discussed. It's about becoming the trader who can execute that setup. If you cannot execute the setup and you've just learned it, then that's not going to reward you. So that's about the session, guys. And if you would like to learn this in the live market, we have the live market mentoring sessions. A longer program is there, shorter 1 week program also there for those who want to try and get a glimpse of what we do. You can get in touch with us. See you there.